Hello everyone, today we're going to talk about tax moves that can be made before year-end for individuals. My name is Ray Halstead. I'm here with Andrew McMillan, who's the tax partner at REH CPA. Andrew, you just got done with the 10/15 deadline, and we're looking at, now the next big thing is 12/31, which is the end of the tax year. I know for the next month and a half, we're going to be looking at, doing tax planning for individuals. And wanted to get your thoughts on what are some moves people can make before year end to help lessen their tax bill.
Yeah, now's the time to start thinking about this, because before you know it, it is going to be the end of the year. So one of the biggest deductions that I try to make sure my individual taxpayers know about is contributing to your retirement account through your employer.
Right.
If you got a 401k or a simple IRA through your employer, make sure you're maxing out that contribution amount for you. That's a really good way to create an additional tax savings for you. A lot of times that does have to be done before the end of the year, so you want to make sure you communicate that with your HR department or payroll provider at your current workplace to make sure you've met that limitation there. Another one is contributing to a traditional IRA for an individual. If you do have until April 15th to make that tax deduction, so I'm not as concerned really about making sure that's done before the end of the year, because it can be limited in certain circumstances.
Yeah, and sometimes people don't understand that not everybody can do an IRA contribution,
right.
And sometimes there's income limitations based on if you're covered by a plan. Sometimes you can do a spousal IRA. So there's a bunch of different things that could go into whether or not and how much you can do for an IRA, and sometimes that's better to wait until your CPA can do the tax return, and he can let you know how much to do for a deductible IRA.
Exactly. Yeah. For example, a lot of times that's just usually a conversation I have with a client once the return's prepared, to say, hey, if you do an IRA for this amount, it's going to save you this amount of money in taxes. If you don't, you owe this amount of money.
Right. But
in
if you
taxes.
are interested in doing an IRA contribution, you need to make sure and figure that out before 4/15, because
Exactly.
you can't do it after the 4/15.
Exactly. Yep. Another good deduction is contributing to an HSA account. If your health plan allows for an HSA, making sure you get that contribution in. That's really a no-brainer when it comes to tax deductions. Is making sure you're putting money in your HSA.
Yeah, you definitely want to check and make sure, because I think you have to have a high deductible plan. And it has to actually qualify for an HSA. So definitely check and make sure you can do that. And if you can, that's a really good deduction.
Yeah, and if you itemize your tax return, if you take an itemized tax deduction, contributing to your charitable organizations, those would all be a tax deduction for you. Paying medical bills. Those are all going to be Schedule A itemized tax deductions that you.
Yeah,
and
I tell people all the time, give to charitable organizations because it feels good. A lot of people have this misconception that if you give $10,000, you're going to get a $10,000 return in taxes. It's just not how it works, right? So if you donate like $10,000 to a church, it's probably going to save you $2,000 potentially if you're an itemizer. Right. So do it because it feels good. Yeah. Yeah. Which is what we all do. We give to charitable organizations because it feels good when we want to help.
For sure, and and another deduction for individuals is if you're if you're one of those guys that has a lot of money in the stock market or in mutual funds, tax loss harvesting is what a lot of individuals start trying to do. If you've got some funds that are underperforming or at a loss, but you've also got some really big high income gain stocks, a lot of times your financial advisor or you can run an analysis there to see if there's some losses that we can harvest, that we can go ahead and recognize and pair that with some income to help reduce that tax liability for
right.
you.
Yeah. So tax loss harvesting is a big thing to do before year end. You definitely want to talk to your financial advisor about that. If you're doing it on your own, you just want to be really careful with the wash sale rules, where you sell something for a loss, and if you buy it within 30 days, you don't get to take that loss.
Right.
So you kind of mess yourself up. But yeah, absolutely. Tax loss harvesting is a fantastic way to help lower if you have capital gain income.
Yeah, and one thing I always like to make sure my individuals know, and it's not really a tax deduction, but it's something to manage, is if you're on the Affordable Care Act through the exchange and you're getting subsidies through the Affordable Care Act, through Obamacare, if you're getting subsidized health insurance, please make sure that you know what your income needs to be to qualify for those subsidies, because I can't tell you how many times we have to deal with it where an individual has to repay all of those subsidies that they've gotten through the year because their income was too high.
Somebody sold some stock on 12/31, or because they for some reason a stock went up, so they sold stock. They recognized $20,000 in gain. Now all of a sudden they've got to pay $20,000 in health insurance premium back to the federal government.
Right.
So be very aware of your income limitations and what all goes into calculating whether or not you need to pay back that subsidy because it can be devastating.
It's not just that W-2 wage that you get. They're going to look at all of your sources of income that are on that tax return. So it's if you're getting subsidies, I almost recommend please make sure that you have talked to someone before the end of the year to see if you're in a good spot to where you don't have to repay that health insurance, those subsidies. So those are big ones that I always like to cover with my clients before the end of the year. Yeah, I mean, now's the time to do it, like you said.
Yeah, man, those are all good things. And, like I said, we're doing tax planning now between now and year end. Don't wait till year end, because once 12/31's over, it's difficult for us to make any suggestions. Yeah. So, we're now actively doing tax planning for individuals. So if you feel like that you're going to have a big year, or you need to really, have somebody take a look at this to make sure you're covered, feel free to give us a call here at REH. We really appreciate it. Thanks, Andrew.
Thanks, Ray.